Welcome everyone to another episode here at the Inner Wealth channel. My name is Bastian and I have one question for you guys today. Have you ever found yourself on the opposite side of the directional bias for your day? Have you ever found yourself thinking that the market is against you? Okay, if you've answered yes to either one of those questions, I have a few tips today for you that may better suit your style of trading, that will assist you no matter what style of trading you have, that will assist you better understand these markets, that will assist you navigate through them more fluently, and to position yourself in a more winning position rather than a lower probability position. So today we're going to be reviewing the US dollar index, okay, the DXY. And a lot of you may already know about the DXY, and that's awesome. But for those of you, I'm speaking to those of you who don't know about the DXY, who don't understand it. And maybe for those of you who know about the DXY, still tune into the end of this video, because I may use the US dollar index in a way that you have yet to understand. And so I want to show you guys the way that I utilize the US dollar index in my everyday trading. Okay. First, I want to start by saying that there's not a single day that goes by that I don't look at the US dollar. Okay, even the days that I don't pull the trigger on the market, I look at the US dollar. Even, let me even put it this way. The first chart I look at ever is the US dollar index. Whenever I'm diving into the markets, the first asset that I'm paying attention to is the US dollar index. And why that is that, okay? My mentor a long time ago, he's been trading for over 30 plus years, told me that if I wanted to first get well and profitable to understanding these markets and get fluent in my understanding of these markets, I had to first understand what assets to trade with. Okay, now you guys will develop your own assets and watch lists yourselves, actually, as you progress in your trading. But if you're barely starting out, I highly encourage you to stick with the major currency pairs. Okay, stick with the major assets and the indices. Okay, for me, the major forex pairs, okay, and the majors, I'll drop a list of them right here so you guys can have all the majors. You guys can screenshot it. Okay, the reason that I followed all the majors is because, in my opinion, they have one of the best price deliveries out in the market. Okay, and the reason you want to pay attention to the US dollar index, or also known as the DXY, is because all the majors have the US dollar index as either the primary or the secondary asset. Okay, and as you grow in your trading, okay, you'll come to understand one thing. Currently, as of 2023, okay, January 18th of 2023, the US dollar is the world reserve currency. Okay, and what that means is that the US dollar has one of the biggest influences in the economy of not just the United States, but the world. Okay, and the reason is because currently the US dollar influences about 83% of all foreign exchange transactions. Write that down. The US dollar index, or the US dollar, has over 83% influence in the transactions of the foreign exchange market. Okay, so with such great influence in these foreign exchange markets, you can understand, okay, with such influence, you would want to follow that asset, because being a main driver or influence in the world, the assets that are being traded with or against the US dollar are highly volatile, number one, and have more active institutions trading them, more central banks, more of these bigger entities. Okay? And so price delivery, not just the volume, but price delivery is cleaner all around. So if you're in your first year of trading, there's no other assets that you should be looking at besides the majors and indices and the US dollar indices. Okay? And the reason I'm telling you guys this is because I've gone through my share of exotics. I've gone through my share of assets. Guys, I used to fill up my watch list. My watch list used to be fat. It used to fill up 2 pages. Okay? It's not that I don't want you guys trading the Euro GBP or anything like that. No, by no means, trade whatever you want. I am just advising you as someone who's gone through this journey already. Okay? Don't go through that trial and error of trying to find the best asset. I'm telling you, your best assets are the majors. Okay? And if they're boring or too slow, I promise you, if you can't be profitable with a major asset, you won't find profitability anywhere else. Write that down. If you can't be profitable with a major asset, you more than likely won't find profitability anywhere else, because price delivery, again, is very clean and these markets are very active. Okay? So sharpen your skill sets with these majors before you dive into oil, gold, right? GJ, US dollar peso. I know a lot of people trade a bunch of exotics, and it's good. I'm happy for you guys. I just want you guys to understand that when you're looking at major assets like Euro GBP, Euro USD, GBP USD, AUD USD, NZD USD, USD JPY, USD CAD, all those major assets are influenced by this index and a major level. So now plugging in all the teachings that I've given you guys with order block theory, plus liquidity, plus following structure, imbalances, okay, understanding all of that and putting all of that together. So putting everything that we've learned together so far, putting all of that together and adding this, applying it to the US dollar index. Okay, being that it's a highly influential currency, when the US dollar is bullish, okay, you guys will find that price action maybe moving down for the secondary assets that have the US dollar. Okay, so, and let me make this a little bit more clear. One sec. Okay, let me make this a little bit more clear. If the US dollar I put the wrong sign there. If the US dollar index is bullish, okay, what that means for assets like Euro USD, GBP USD, AUD USD, NZD USD, okay, that means those assets, okay, will go down or will short. We're gonna put short for study purposes, okay? Those assets will short, and vice versa, of course, for those assets that are like US dollar CAD, USD JPY, okay, USD an exotic is like US dollar Mexican peso, okay, US dollar ZAR. All of those, okay, are going to be influenced to go long and bullish along with the US dollar. Okay, and this is your correlation. This is the exact correlation that I want you guys to follow. Okay, now vice versa, if you were bearish on the US dollar for the day, if your bias was to be bearish for the dollar, okay, what you'd be looking at is assets like USD CAD, USD JPY to be going short with the dollar, and assets like Euro USD, GBP USD, NZD USD, AUD USD, those assets you'd be looking to go long. Now, there are some exceptions, of course. Not every asset's gonna follow these rules picture perfect every single day of every single time. Okay, I can honestly tell you and speak from experience. I don't trade gold. I know you guys see it on my watch list, but I more have it up there for the students and break it down for my classes. I don't trade gold, and here's my watch list. I don't trade gold. But one of my exceptions to these rules is gold. I feel like gold has a little bit more of a economic influence behind it, and so it has a lot more to do with how the economy is doing and less where the DXY is going, because I've been part of the market where the both DXY was flying and gold have been flying. So that's one of the an example of an exception to the rule, right? So I will show you guys an example here from this week specifically, actually. So for the US dollar, okay, before we opened up this week, okay, I personally wanted to see some price action to the downside, to see more lows, and the reason is because we have left all of this insufficiency here, and not just that, but all of these relative lows right here. So I kind of want to see these lows over here get taken. So I want to see more liquidity to the downside now. Okay, so if I'm looking for more lows, I'm going to be looking for areas of resistance, previous areas of resistance to distribute from. And so one of those areas was this imbalance here, the opening of it. Okay, so with that, okay, I wanted to see price action distribute above this high. And so if I want to see a distribution above that high, current price is obviously nowhere near that. So I want to see if we can go long, okay, from this imbalance here that took out that previous daily low, right? Took out that previous daily low there. So I want to see if we can get into this imbalance here and essentially show some accumulations to come up to that imbalance, and then anticipate some distribution to see more previous daily lows or more daily lows swept. Okay, so when we were here, okay, for the week, we started here and trading to the downside, and when we got to that imbalance right there, okay, here's where I want to see some accumulation to the upside, right? So if I'm bullish, okay, remember, if I'm bullish on the dollar, now I'm anticipating all of this liquidity to be taken and essentially that previous daily high. Okay, if I'm bullish on the dollar, I'm going to be bearish on GBP USD and Euro USD. Okay, so now inside this imbalance, I want to see some accumulation take place. Okay, and so you can see price action comes down lower, blast to the upside, breaking structure right here. So now we're again officially bullish, even though we already had that intention prior to, right? And so what I want to see is GBP USD. Okay, this is just an example. Okay, I want to see GBP USD go down. Why? Because if the US dollar is bullish, I want to see GBP USD go down, right? And so here, I'm not going to pull up your GBP USD, right? But I want you guys to go back and test this yourself. But this is what this means. So as the US dollar is going up, okay, we get that, boom, into that daily imbalance. Cool. Now, what do you guys think I want to happen from here? Want some nice distribution from there to the downside. And here on the 15-minute, you guys can see a nice distribution took place here. Okay, nice break of structure there. We come into that imbalance. Remember, imbalances are always our entries, and then we get that distribution above the highs, right, inside that daily imbalance. So now what I'm going to look for is some new lows. Okay, so now from a previous area of distribution on the US dollar index, now on the GBP USD, I'm going to look for to go long. Okay, because again, if the DXY is going short, okay, you want to see GBP USD go long. Okay, and you can see here we got a huge meltdown to that previous daily low. Okay, now from our 4-hour accumulation on the 17th to a 15-minute distribution on the 18th, we're gonna go to GBP USD and see how on the 17th we want to see price action short and set up for the 18th to go long. Okay, so now let's go over to the 1 hour here on GBP USD. Okay, and we're going to clear our chart. Okay, and we're going to go to the 17th where we anticipate price action to go long. Why? Because US dollar was going short. And so let's go back and review that. Okay, so here on the 17th at 10 a.m. we went long, and then most of the day we went short. So we're gonna see price action short on the DXY for most of the day. So that means GBP USD should go long. Okay, and then here on the 17th you can see that we short off initially and then mainly just go long for the rest of the day. Okay, and this is what I want you guys to see here. Notice how GU was extremely bullish, even though the DXY was bearish for most of the day until the morning. Then the morning bullishness came in. Okay, and we don't see that bearishness really reflect on GU until 10 a.m. right here, just like it. But notice GU barely pulled back, and I'm gonna bring up both my screens here. We got GU on the right side, and we're gonna have DXY on the right side. Okay, and so notice this is that 10 a.m. accumulation here to the upside on the DXY. Here's that 10 a.m. pullback on GU. DXY goes to a new high, GU fails to create any lows. So what is this telling me? Okay, this is telling me that GU, that pound, okay, the primary asset on GU is so strong right now that the DXY is failing to push any lower, right? So it is encouraging a buying scenario, okay, that took place the next day. Okay, and so then when GU was ready to go long again, DXY the next day was ready to go long. Was ready to go short and support GU's strength, or the pound's strength. Because if the US dollar weakens and gets weaker, the pound will get stronger. Say that again. If the dollar gets weaker, the pound gets stronger. So since the dollar's losing strength and the pound is gaining strength, we blast through. And it was confirmed with this distribution here on the dollar, right? And the same distribution, the same accumulation that you see on the dollar, okay, you see that same accumulation take place on GU. Okay, this is our accumulation there. And here, notice on the right, remember our distribution, right? So you had multiple confirmations for longs when the DXY started shorting, and GU failed to make a new low, okay, and go lower as the DXY was rising. GU decided to go along with rise, okay, had a slight pullback, not as much as the DXY that took out that previous daily low, had a slight pullback and maintained this bullish price action. Okay, so GU being a stronger asset, or being a strong asset, having strength in GU, you can confirm or support more long positions every time we get to a previous area of distribution on the DXY. When we get to a previous area of distribution, show distribution, GU showing accumulation confirms that we're going to go for that long, right? And so until DXY takes out that previous daily low, or when it does, that's when I close my GU. Because if my target on the DXY has been achieved, why would I hold a GU target, right? Because again, the US dollar index is the most influential asset in the foreign exchange markets. Now I'm going to show you guys more and more examples of this. This video is getting kind of long, so I'll definitely wrap it up right here with this one. Okay, I'm going to show you guys more and more examples of this. Tune in to a market review videos. I'm gonna post them up and start tagging them in the description as well, and I'll have them pop up right here as well, so that way you guys can visit that playlist with my market reviews. And in all our market reviews and live streams, we go over the US dollar index. As I mentioned at the beginning of the call, it is the first thing that I look at. It is the main thing that I look at. Okay, there's no other asset that I look at more than I do the US dollar index, because whether I'm trading indices or currencies, the US dollar index has an influence in it, or a play in it. Okay, remember, if the DXY is bullish, GBP USD is short. Okay, if the DXY is bearish or short, GBP USD goes long, right? So I want you guys to remember that correlation, or reverse correlation. But with that, guys, I'm gonna let you guys go. I appreciate you guys. I want you guys to tune in to the market reviews. Okay, the market reviews are important. Is where you guys actually see me putting this stuff into application. The live market streams, okay, those are also sessions that I want you guys to review. You guys will see us actually take entries, take exits, call out entries, and mark out our exits, do the full market analysis, as well as just kicking it with us and vibing with us, right? So with that, guys, I'll catch you guys on the next one. Take care, clap easy, and trade responsibly. Peace.